Welcome to The Explainer. Today, we're digging into the great gold rush of 2025. This is a huge story about record-breaking prices, a whole lot of global uncertainty, and, just maybe, a major shift in the world's entire financial order.
So, you've probably seen the headlines, right? Gold this, gold that. But what's the real story behind this gold fever? Why is everybody all of a sudden rushing into this ancient asset?
Well, to put this into perspective, gold is up a staggering 45% just this year. That's its best performance since 1979. So, this isn't just a little rally. This is an absolute phenomenon. Now, a surge like this, it doesn't just happen in a vacuum. It's the result of what you might call a perfect storm of global economic and political factors, all hitting at the exact same time. Okay, let's break this storm down. At its core, you've got this stubborn inflation that just keeps prices high, a U.S. economy that's slowing down, and a weaker dollar. Then you throw in escalating tensions around the world and political drama at home threatening a government shutdown. It's the perfect recipe for widespread anxiety, and when people get nervous, they run for cover.
So how does all that general unease turn into record-smashing demand for gold? Let's take a closer look at the core drivers here.
It really all comes down to this one simple concept: a safe haven asset. In times of turmoil, investors hunt for things that will hold their value when everything else feels shaky. And for thousands of years, gold has been the ultimate safe haven.
Now, the momentum's been building all year, but September was really the flashpoint. First, the Fed cut interest rates. That makes gold, which doesn't pay dividends, suddenly look a lot more attractive compared to bonds. Then, fears of a government shutdown basically threw gasoline on the fire, sending the immediate delivery price, the spot price, into uncharted territory.
And check this out. You can see a crystal-clear inverse relationship right here. The US dollar index has dropped almost 10% this year. And because gold is priced in dollars all over the world, when the dollar gets weaker, the metal gets cheaper for international buyers. That new demand from abroad sends prices absolutely soaring. And we're not talking about a few nervous investors here. In September alone, over $10.5 billion flooded into gold-backed ETFs. That is a massive, massive wave of capital looking for safety, and it just shows you the sheer scale of this global rush. But here's the thing. All that investor cash, it's really only part of the picture. There's a much bigger, much deeper structural shift happening called de-dollarization. This is this global trend of countries actively trying to move away from relying on the US dollar as the world's main currency. And don't just take my word for it. As this quote from Anindya Banerjee at Kotak Securities points out, this isn't about you and me. This is about central banks, the most powerful financial institutions on the planet, fundamentally changing their entire game plan.
For the last few years, central banks have been buying gold at a mind-boggling pace, over 1,000 tons every single year. This isn't just about balancing a portfolio. It's a full-on geopolitical power play. Countries like China and Russia are leading the charge, stacking up gold to reduce their dependence on the US dollar. And here you can see the result of that massive buying spree. Back in 2000, the US dollar made up 70% of global reserves. Fast forward to today, and that's down to 58%. And what's filling the gap? Gold. Its role as a neutral, independent store of value for entire nations is growing and fast.
Of course, a rally this huge has very real consequences. It creates a pretty clear divide in the corporate world. So let's take a look at who actually wins and who loses when gold prices go through the roof like this.
It really is a tale of two very different markets. On one side, you have the gold miners, the traders. They're seeing record profits. But on the other side, any business that uses gold as a raw material, like, say, jewelry makers, they are facing some serious headwinds.
For the big mining companies, the math is beautiful and incredibly profitable. Think about it. They can pull an ounce of gold out of the ground for about $1,200 and then sell it for over $3,800. That profit goes straight to their bottom line, leading to these huge stock gains. I mean, a company like Newmont is up 80% this year alone.
But oh boy, it is a tough time to be a jewelry seller. They're getting hit with it double whammy. The cost of their main raw material is skyrocketing, and at the same time, customers are thinking twice about buying expensive luxury goods. In fact, some people are now choosing to buy a small gold bar as an investment instead of a new necklace, which completely bypasses the retailer. And you can see that pain reflected in the poor stock performance of some major jewelry brands. All right, so that's the what and the why. The big question now is, what happens next? Where do the experts see prices going from here, and what are the key signals that we all should be watching?
Well, the consensus among analysts is overwhelmingly bullish. Many are predicting gold will blow past the $4,000 mark by mid-2026, and some of the long-term forecasts are just wild, as high as $9,000 by 2030. And hey, wherever gold goes, silver is pretty much expected to follow.
So, if you want to get a sense of where we're headed, you've got to keep an eye on these 4 signals. Number 1 is the Fed's interest rate policy. Then there's the strength of the dollar, the pace of central bank buying, and, of course, the overall geopolitical climate. Each one is basically a barometer for global uncertainty, and together, they're going to dictate what the market does next.
Ultimately, when you step back and look at the big picture, this all amounts to a fundamental change in the global financial system. Gold has officially retaken its position as the second largest global reserve asset, right behind the US dollar. This is so much more than a market rally. It's a major shift in the very architecture of the world's economy.
And that leaves us with one final giant question. Are we just witnessing a temporary market fever, a bubble that's going to pop? Or is this the actual dawn of a new financial order, one where gold plays a much, much more central role?
That's our look at the great gold rush of 2025. Thanks for joining me.